Hello friends, today we'll discuss about index fund. So what is index fund? So okay, index fund, as the name suggests, it's a fund, but it gets invested, or the investment is to an index. So that means what is an index? So index is what tracks the stock exchange performance of any stock exchange. For example, in the UK, it's FTSE FTSE 100 is the index. It's an index, so that means 100 blue chip companies shares are clubbed together, grouped together. Okay, so that becomes an index, and that kinds of becomes a yardstick to measure the performance of the stock market overall performance. Okay, so that means some shares may be down, some shares may be up out of those 100 shares, but index is an overall performance indicator. So index fund are some of the funds which are created, which invest in these indexes, okay, or these companies which are part of this index. So in the India market, we have Sensex, okay, for BSE Sensex, so Sensex, I think it's around 30 or 40 shares, or 30 shares, I guess. It's a group of those 30 blue chip companies, Infosys or Reliance, those top companies. They are put together, and when you invest, or so there are companies who gives you the ability to be a fractional shareholder of these companies when you invest in these funds. Okay, so as soon as your money goes into these funds, okay, when you invest, then the fund manager invest based on invest in these stocks or these shares, these companies, based on the allocation, certain allocation it may have in that kind of that fund. Okay, for example, let's say Sensex, sensitive share index, Sensex, has what is that, Infosys, let's say, has a weightage of 30%. So that means when you invest your fund into this index fund, then 30% of your investment goes in buying the shares of Infosys. Okay, so exactly same. So there are different countries have different indexes, and you can invest through the, again, different companies. You can invest in all these different indexes of different countries. And one of the most popular and famous index is Standard and Poor's 500, S&P 500, they say. Okay, there are 500 top companies which are traded, which shares are traded in the US, maybe in the New York Stock Exchange, or maybe in Nasdaq, stock exchanges which are traded. So when you invest in S&P 500, so they are going to allocate, or the fund gets allocated based on the weightage, okay, of S&P 500. Which company could be a Microsoft, gets let's say 15% of the weightage. So that means you get your investment, 15% of it goes in buying Microsoft shares. Okay, so now this is an index fund. So there are two kinds of index fund, which is a mutual fund and ETF, or exchange traded fund. Okay, so mutual fund is actively managed. That means a fund manager is there who manages your fund. There will be a group of people. Their objective is to make sure that your investment gets the highest return. Okay, so the expense ratio, what is expense ratio? Expense ratio is the charges, okay, on an annual charge what your fund will have, based on sort of different companies, or different fund will have different expense ratio. So usually you'll see that mutual funds have more expense ratio than the ETF, exchange traded fund. Okay, exchange traded funds are quite sort of passively managed. Okay, so passively managed means these are traded, exchange for a traded fund. These are traded in stock exchange. So that means these are kind of just like shares. Okay, you can buy it online, okay, not like a kind of a mutual fund which are not traded, but ETFs are traded in the stock exchange. You can see the pricing and all. So ETF is a good way of investment because their expense ratio is very minimal, around 0.03, 0.05, 0.06 or 0.08%. So that means if you are investing, let's say around 10,000 pounds, you'll be paying around £3 or £5 or £6, based on the expense ratio what this fund has. So this is a good strategy for passive investment. So you can invest your stocks and shares and get that income. Slowly your income can grow. So this is not something that means index fund is not a good investment strategy for those people who want to just make a lot of money out of your fund. Okay, when I say a lot of money means what? So that means ETFs or these index funds, they give you definitely return because these are all investment in blue chip funds, and this is tracking the fund as well as the fund goes up and down. Based on that, it your sort of a return is tracked. However, these are not invested in one particular share. Okay, so that means the risk is low, but it's also the return in comparison to other sort of active investment strategy of actively investing in stocks and shares or trading in stocks and shares. That is not there. Okay, so that means a hands-off strategy. You see your capital growing slowly as you see the index. Always, if you go to Sensex or if you see FTSE or S&P 500, you see that steadily it grows over a period of time. You never see it declining. Okay, so that means you'll always get a good return on your investment. But for example, if Facebook, okay, shares have grown, or Amazon shares have grown, let's say 1,000%. I don't know how much Amazon shares have grown over probably last decade or so. It has significantly grown. You may not have that kind of a growth in ETF because this is a fund, not one share. Okay, and so that is the reason why if you want to invest in shares, you have to analyze it quite thoroughly before you invest, because you may lose the money as well, or your share price may go down completely. But here, because your investment is not on a specific one company, so one company may go down. For example, out of this 500 S&P 500, if it constitutes of a technology company, that would be, let's say, Facebook, that would be Microsoft, technology based company, but there would also be Coca-Cola or Unilever, these kind of companies. I think Unilever is quoted in Europe, not in the United States, but just giving an example. So it is from different sectors, those 500, if you are investing in S&P 500. So now last thing is, how do you invest? Okay, it's very easy, because I am from India, so I invest in Indian stock markets as well. And so if you are like me, or you are looking for Indian investments, so there are so many ways, like ICICI Direct is a good way to invest, or you have SDFCs have their own platform as well. You can invest through that, or Zerodha is a good popular one as well. This is a less commission as well. They charge kind of a more online, that's getting popularity in India market. So kind of every major bank in India, they provide the platform for you to hold your investment, to invest as well. In the UK market, these are not exactly the banks which gives you the opportunity to invest, to hold your investment accounts or ISI account. These are independent companies. For example, UK's biggest one is Hargreaves. Hargreaves Lansdown. So they are I think one of the FTSE 100 companies as well. Okay, themselves. Okay. So that's they are quite big as well, but they are sort of charges are a bit higher, because the website is they do a lot of product research and send you a lot of articles as well. AJ Bell is a good one as well. Or you can go for commission-free platforms in the UK, just like freetrade.io or eToro. Okay, there are so many platforms. Freetrade.io gives you an opportunity as well to invest in ISS, stocks and shares ISS as well. So which is you can get a bit of a tax saving there as well. So there are so many platforms, and all these platforms as well, they give you the opportunity to invest in the US ETFs as well, or US mutual funds as well. So you can look for those opportunities as well. Okay, so a good investment. Wish you all the best in your investment strategies. And now the stock markets are going up, and it is the best time for anyone to start putting some money in investment strategies. And those of you who have hugely been benefited out of the dip during this pandemic, where last year's pandemic, a lot of people have bought a lot of shares and stocks and all, so they have gained humongously through because the stock markets all over the world are quite bullish now. So best strategy to get in. So with that, we are done and over and out.